Perfect. Thanks, everyone, for your great presentations. Moving on now to the panel session of our breakfast, we have Urban Analytics Managing Principal Michael Ferreira as the moderator. Michael's been an owner and operator of Urban Analytics for nearly 20 years and has established himself as the most respected and well-known analyst in the new home industry in BC. In addition to running Urban Analytics, Michael in his spare time also has been working as a taxi driver and as a coach for his kids, Sam and Abby, taking them to and from baseball and hockey activities. It's been about 9 years working with Michael, and it's been a pleasure to work with him. We're also very honored to host our panel guests for today's session. Our panelists are as follows. Eric Carlson, founder and CEO of Anthem Properties. Under Eric's leadership, Anthem has grown to become one of the largest and most significant residential developers in Western Canada. Eric offers a wealth of information and is probably one of the most entertaining presenters in the development industry. Our next panelist is Bob Yarish, Regional Sales Manager, TD Alberta. Bob is on top of all of the latest interest rate trends and can understand how they're going to be impacting the new home market. Our third panelist is Dan Stewart, Executive Vice President, Western Canada, Cameron Stevens. Dan leads all of Cameron Stevens' lending activities in Western Canada and will be able to shed some light on what's happening in the construction lending space. And our final panelist is Kimberly Poffenroth, VP Business Development, Alberta Urban Analytics. Kim will be able to provide her expert insight as to what's happening in the trenches of the new home market in Alberta. And with that, I'll hand it over to the moderator, Michael Ferreira.
Morning, everybody. If the other panel members, that was your cue to come on up. Come on up, Eric. Sorry. We didn't rehearse this. They just came very late last night, so. Yeah. Take a seat, any seat. Thanks, everybody, for coming this morning. I know it's a bit challenging with the weather, and some of the crew, I know Eric flew in very late last night from Vancouver, later than he was scheduled to. So just improve the sight lines here. Great presentation by our staff, I thought. Really covered a lot of what was going on both in Calgary and Edmonton over 2018, and also looking ahead to what they see happening in the years ahead. So the focus of the panel discussion this morning is really just to get a sense from different sectors of the market, different stakeholders within the market, as to how they're feeling about things. We know it's been a very challenging few years, and it continues to be challenging. We're experiencing the same thing. We see it on the ground every time we go and talk to various sales staffs and try to get a sense of how they're feeling and what the conditions are in the market. So we thought it would be helpful to kind of get a sense from some of these different stakeholders. So, catch my breath. Bob, you were with us a year ago, and at that time we were chatting about the stress test that had just been implemented into the market. And of course, we were starting to feel some of the impacts of it. But now that we've had it in place for a full year, and there's some obvious impacts that we've seen in terms of qualification and who can get qualified and who can't. What, if any, are some of the other impacts that you've seen over the past year of the stress test rules that we may not be aware of?
Yeah, no, absolutely. And first, thanks for inviting me back. I've never been invited back to participate in a panel before. I think last year I was here this time, and I said I hadn't seen any impact of the changes yet, because much like the slides you saw, people sort of loaded up at the end of Q4, were pre-approved, and really did everything they could to avoid some of the stress test changes coming through. But we've definitely seen a slowdown towards the fourth quarter of this year. I think plus the seasonality, this isn't always a slower time of year in the mortgage industry. But I'd say that the changes are there more obviously now than they would have been last year. I also looked back this morning before I came, and I looked to see what the rate environment had done, and it's been up and down this year. But the reality is, if I look back when I was sitting here last year, the 5-year fixed rate mortgage is about only a 30 basis point increase from where it was. But the reality is that stress test now means they're qualifying at well over 5% to get into that same mortgage. So we've seen a few trends happen. Most notably, I think our first-time buyer has been impacted significantly because that first-time home buyer, in addition to a few years ago with not being able to go to a 30-year amortization, has been really impacted by staying with a 25-year amortization and having to qualify at a higher rate. I think the other trend we've seen is that people are now paying more interest really over the long term because the conventional buyer is now moving into that 30-year amortization and paying a price premium for it. The rates are higher at 30 years than they were at 25-year terms. So I think those have really impacted that buyer. And I think secondly, as we go out to sales centers, we've certainly seen a difference in terms of what our activity has been. I think in sales centers we visited, there's been a tremendous amount of turnover at that sales manager, sales site level where the inventory is not moving nearly as quickly as it has been. So I think those have been some significant changes that have impacted things. And so I think the consequences that I saw last year, not only how much more difficult it is for particularly that first-time home buyer, but also I think is that secondary home buyer who's looking to perhaps sell and rebuy again. That's actually a big consequence because the economic factors have meant that people have not been getting steady increases. The average, salaries over the last couple of years where bonuses haven't been there, they're not having the same income to qualify. So combined at a higher qualifying rate, perhaps lower or flat income over the last couple of years has made it more difficult for sure. And I don't see that trend, changing dramatically. As we visit different realtor sites and form new relationships, the first question that gets asked of me is, so what do you think about the spring market? And I actually return the comment right back to them. I said, well, I don't know. What do you think? So as much as you introduced me as an interest rate expert, it's really an indecisive time right now with fixed rates have been going down, speculation about the second half of this year is prime lending rates going up. Bigger speculation is what's going to happen to stress test rules with elections on the horizon. So I think there's still a ton of uncertainty around what's going to happen.
And do you find yourself acting as a bit of an educator when it comes to mortgages and the stress test and some of the changes that have occurred in the mortgage market over the past year? Are people aware when they're going in to buy a unit that these conditions exist?
Yeah, I'd say people are aware for sure. More than they would have been a year ago, because I think our team, that's our job, is to really be educators and give that sound financial advice. Quite honestly, I think we spent the first quarter of last year actually educating our teams internally about the impact of the stress test, because they would look at a good client and say, how come they can't get approved for this particular property with their down payment, because their payment's going to be lower than that anyway. And so it actually took us some internal storytelling and advice giving to actually make sure our teams were capable of giving that advice for sure.
Eric, you were at the Calgary Real Estate Forum last fall and gave a memorable dissertation on your view on the market and wanted to kind of pick your brain a little bit more, allow you to expand a little bit on that. You mentioned at that forum when you chatted that Anthem was on the 1,000-year plan for Calgary in terms of development here. So that tells me that you're pretty committed to Calgary long term. Despite the past challenging couple of years. So taking that longer term view, what makes you optimistic longer term about the Calgary market?
Well, if you take the really, really long view and say your expectations will take you 1,000 years to absorb waterfront down in the Eau Claire Center, you're going to succeed. So that'd be one reason. Second reason is that when it snows in Calgary, like more than a centimeter of snow, the whole city doesn't shut down like it does in Vancouver. People freak out with their summer tires. And the main reasons why I like Calgary, it's really, there's a story of Calgary, there's the story of Alberta, right? So I grew up in BC. It's weird there. Like, we got really nice trees and water and whales and stuff, but we're yet really weird about it as a population, and we vote for Green politicians and NDP politicians and Liberal politicians and free enterprise politicians, and it's just weird. So we get these weird outcomes. You can't build pipelines and stuff, or trains, or buildings. There's a real housing shortage in Vancouver right now, and so the solution is stop everything. Don't build anything till we figure this thing out. And it's not quite like that here. Here in Alberta, there's this, it's still sort of new Canada. It's like we're trying to build a country. We're trying to build infrastructure and have families and raise kids and be inclusive and diverse and all these wonderful things that the government talks about, but it actually just happens organically here. So a guy like me can feel hopeful when I arrive here in Calgary or Edmonton. They're two totally different cities, I agree. I have a very different but very positive feeling every time I come to either of the two cities. And then you look at what does that lead to in terms of stuff you can leverage as a business person. There's just great infrastructure here. Like there's physical infrastructure is great with the highways and the roads, the distribution systems. The airports are among the best in the world, let alone Canada. And so, if you're a distribution business or you just need to get in and out and around about, that's something to leverage. The social infrastructure is likewise great. I'm not sure how many of your panel are from Alberta, but if you guys are the next generation, that's awesome. I couldn't talk like that when I was your age. But of course, I might think you're younger than you are because everybody looks so young to me now, right? But the social, like the public education, the quality of universities, the quality of the healthcare, it's the best in the country. And then if we look at these prices, prices are going up, and I'm looking at they're laughable. They're laughably cheap compared to Toronto or Vancouver. And so why wouldn't a smart young person from Vancouver who's despairing because they can't afford $1.3 million for a piece of crap house in North Vancouver, why wouldn't they move to Calgary or Edmonton? It's cold, I know, a little bit, but it's not cold that often. And when it's cold, it's nice.
Sunny.
Yeah.
Yeah.
Yeah. And there's more, but this is a short panel. Go ahead.
Yeah. We've got politics questions coming up, Eric, so you'll get another chance. You mentioned just how cheap for somebody coming from a Vancouver or a Toronto the prices seem here, and Dan and I were commenting as some of the slides were up on some of the price per square foot values that we're seeing for some product in some areas of both Edmonton and Calgary, and commenting on how do you even make the numbers work, like how are these projects viable at those prices. So Dan, as somebody looking at lending on construction, and given some of the challenges that we've seen in both cities over the past few years, and some of those low prices that we're seeing, how do you approach lending on a project, whether it's market condo or rental, given the conditions that we're seeing in each market?
Just as a background, Cameron Stevens does lending combining institutional capital and private investor funds for higher leverage. So if we look at it in terms of we've got to protect the interest of the investors, we've got to do a serious risk analysis. And right now, if we look at the condo market in Calgary and Edmonton compared to Vancouver and Toronto, you don't have the demand, so you don't have the pre-sales to walk in the door and say to a lender, it's 80% pre-sold, don't worry about anything else. It's a significant risk if you look at it in terms of doing it on a speculative basis. It also depends on who you're dealing with. If Eric was to come to me and say, I want to do a 100-unit project on a spec basis, I'd be going, what's plan B? What's plan C? And they probably have one. They'd look at it and say, if we can't sell these individual condominium units on completion of construction, we could rent it. Might be an expensive rental project, but they could put it on their balance sheet and carry it. They could refinance it. Might have to write a check to balance that debt to equity ratio, but there's potential there. And if you're a smaller developer,
Do you have a loan on our project?
not yet, no, but we'd like to have one. But if you're a smaller developer and you've got one or two projects and you're looking at that same risk, you don't have the same options. You might not have plan B or C there. And if it doesn't work on a condo sales basis, then what do you do? So from an underwriting point of view, we'd look at a more conservative loan there. We'd look at it and say you probably need more equity. And if that's the case, do you have the ability to provide that, or do you need equity partners? In today's market right now, we're targeting less condo product because the demand just isn't there. And there's a lot of speculative projects, especially smaller infill projects, where you have a lot of people hoping that when they finish construction, it's going to sell. And so far, that hasn't been the case. We've shifted strategies this year and are looking at more purpose-built rental product. It makes sense. And if we look at who the renters are, there's been comments previously about millennials who are now looking at it in terms of, well, I can't buy what I want, where I want. I've either got to come up with 20% more down payment, I've got to take 20% less mortgage, or I've got to go 20 minutes farther out to find the home that I want, but that's not where I want to live. But now they have choices. It used to be for decades that it was nothing but old rental stock in Calgary and Edmonton. Some apartments you don't want to live in. But now there's purpose-built new product, some of it with very good quality finishings, some of it with amenities that make sense. And if you can find it along a rapid transit line where you can walk to a C-train station, maybe you don't need a car. Maybe you don't need a second car for couples. And that's a huge expense for them. So it gives them a choice. And so we're seeing a lot of prospective buyers who are now renters. And they're looking at it and saying, until there's some more certainty in the marketplace, I'm quite happy to live here in a rental unit that satisfies my needs. We're also looking at more commercial product where there's value add plays. The industrial market is coming around. The retail market has been very strong through the recession. Office, not so much. So we'll stay away from that product until we see some improvements.
Yeah. On the multifamily and even the rental side, Kim, you and the team highlighted how much inventory there was on the condo side as well as on the rental side, and how much is coming. From your perspective, where do you see some of the opportunities in the market for these different product sectors?
I'm not sure if I'm hooked up to this one. Perfect. Yes, thank you, Mike. So there is a number of projects coming to market, particularly purpose-built rental projects. As Andy mentioned, I think it's in the 3,000 unit range of purpose-built rental units coming in the next 2 years, and we anticipate in the next 5 years that number to be quite a bit larger. From the condominium side, we're seeing less proposed projects in terms of new multifamily home market, but more out on the suburbs, which is the trends that we're seeing. So higher sales out there are dictating demand, which is allowing still projects to come to market in those outer suburbs. Opportunities, though, I'm going to focus just on Edmonton in particular first. I think one of the largest opportunities in the Edmonton market is to get in around the University of Alberta, as we can see that as having a university is a very secure site. There's not a lot of either condominium product or rental product in that area. I think that would really take off. In terms of the Calgary market, where opportunities are, of course, I still think, as Andy mentioned, the Sunnyside Hillhurst areas are prime, although land values are high in those areas. But it is a desirable community. Anywhere along the Beltline is going to be successful. We did see a condo project launch in the downtown, which is exciting, and I do think as the inventory gets absorbed, we will create more room for new market condos to come to market. We just want to see some of these remaining units get absorbed, but price sensitivity is still a key factor in Calgary and Edmonton's market at the moment, just with a little bit of economic uncertainty. So coming in at an affordable price point is going to be a difference maker for first-time home buyers particularly. I don't want to completely exclude the downsizer market. There is definitely still a market for luxury, higher-end product to come to market. Just not as many units as you would likely see in more of an affordable style of product.
And I would probably suggest that anybody building for that buyer group needs to be patient in terms of how long it takes them to make their buying decision and such. So it's not going to be, they're not a super urgent group when it comes to making their buying decisions. So easing into the political conversation, we have a federal election coming up in the fall of this year, Bob, and some of the chatter with some of the national economic conditions in the market may be getting a little shaky, or some people even suggesting that we might be seeing a recession come in over the next couple of years. There's some talk that, as a bit of a plum, the federal government might look at easing the stress test rules, maybe dropping it perhaps by a point. What are your thoughts on how likely that is to occur, and would even a point drop in the stress test have an impact, a positive impact on the market?
Well, I was at a party at Christmas time with a builder, and I walked from one end of the room to the other, and they asked me twice, did you hear the rumor that between Ontario and BC, there's going to be no stress test next year? And I said, I hadn't heard that rumor. Nobody's validated that. But if I had a bit of a crystal ball, and I think the provincial election will become a platform issue as well in terms of what the potential new provincial government could do to lobby federally. I think we were at the CREB forecast last week or 2 weeks ago, and Jason Kenney was there speaking and talking about this subject as well. If I had a crystal ball, I'd say the stress test is not going away. I think dropping a point would make a significant difference for sure in buyer confidence and even seller confidence to get out there and flip a home. But if I had a view on it, I'd say what they would choose to do is cap the stress test. So in a rising rate market, could you cap the stress test at a maximum amount that if we see fixed rates and prime rate continue to rise, capping it would still give buyers a sense of confidence. They wouldn't have to be constantly worried about a fixed rate change of what their month-to-date payment would look like. I think the second thing that would really help is if the insurers could change the rule and allow a first-time buyer to go back to a 30-year amortization. I think that still gives some more opportunity to buy that extra bit of home with taking that 5-year extra amortization. So I think we're going to see this as a provincial, topic of conversation. It's not going to be clearly the primary topic of conversation, but we'll see how that influences what the federal government does. But those would be two things that I think could really make a big impact.
Yeah, and it would be nice if some way we could have more regional policies throughout the country as opposed to a national policy that's really designed to target a couple of markets that may be seeming a little overheated, but it applies to all other markets in the country, whether they need that medicine or not. So hopefully we see some relaxation there on both fronts, on the stress test rules and the amortization rules. So Eric, here you go. So provincial election coming up in Alberta in a few months here, and another one federally. And the federal election all of a sudden seems to be getting a lot more interesting, given some of the news that we've seen come out over the past week with the SNC-Lavalin issue that's been at the forefront of the media. But with respect to how each election will impact the housing market, what are you seeing on those fronts?
Well, can we just stay at a high level for like an hour and a half? Yeah, I just love that SNC-Lavalin thing. That smug that guy. He's just between a rock and a hard place finally, and he doesn't have the intellect to get his way out of it. I just love it. Sorry, look at me. I'm old. I got white hair. Of course, I think he's a little asshole, right? It's like I heard my dad talking the other day, and I went, I don't know who's talking, him or me, And he's 89. Not good. Yeah. Don't ever become cynical, kids. It's just not a good way to be. So let's start federally. I think that it's really, the focus always should be on two things. Policy. What works, what doesn't work. Let's forget the left-wing, right-wing, liberal, conservative, socialist paradigm. We have to, the world's complicated. We've got to break away from that. And I don't know that that's happening. We're still sort of stuck in this sort of, colors. And then the second thing about policy, after policy, is just leadership. I'd rather have a left-wing great leader than a right-wing idiot, because they're going to mess things up. They're not going to get the policy right. They're not going to execute properly. They're not going to inspire people. So if I look at what's happening in the country in the last several years, and it's not just at coming out of the Prime Minister's office. There's been a real lack of bold leadership. There's not been a cohesive policy framework. And so we can't get a pipeline built, which is an essential piece of infrastructure. We can't even hear an argument about why it's a good idea and still not burn the climate up with, climate change and global warming and all that stuff. That's just, the leaders have been hiding. They just don't want to take it on. And we're getting pummeled as a country by outside influences, and it's hurting the country as a whole. So at a federal level, we should be just outraged about that. And it's not just pipelines, it's everything. It's social things, it's tax policies being competitive relative to the rest of the changing world. We're just not dealing with any of that stuff. So we should be outraged and we should be looking for change, but we're not. We're going to wait and we're going to get upset about something like SNC-Lavalin, which is maybe somebody lied to somebody once. there's other things that are where I think the way they treated that admiral in the Navy, if you look at the evidence that's coming out, is abhorrent, and the abusive process and all that. I could tolerate that, however, as a businessman if you could get everything else right. So I think there was a change. It'd be great, but not really, because I don't know that I see strong leadership elsewhere. I mean, the NDP leader, that's funny too, isn't it? Right? So the election to me in Canada is not going to be a game changer no matter what happens. It's just going to be interesting and entertaining. Provincially is different, and even though I'm this conservative guy sitting up here, I think that we tend to beat up Rachel Notley a bit too much because we're blaming her for these other problems. I think she is a leader. I think she's tried really hard to deal with a really bad hand. She got a really bad hand when she showed up. The rest of her party, however, is sort of in the category where I would be up there with my dad talking about them. So she's all alone. She's in the wrong party. It's ironic. So I think she's going to get pummeled in the election, and her party. And I think that the United Conservative Party will come in with Jason Kenney. It won't be as smooth as we think. And what will that do? It's a change. And they'll get the policy right, at least. And I think he's a good leader. And so I think that it will be viewed as a positive thing. It'll increase confidence a little. And, the stress test and the fear of interest rates and the uncertainty from the economy have hurt the housing market in the last year here. But I think that it's just this overall level of fear. I mean, how many times can you get beaten up? What happened to the oil price sort of through the second half of 2018? It completely crashed. And then we couldn't get a pipeline. Then we lost it, lost in the court and all that. So I think that psychological factor, in addition to the mathematical considerations from the stress test, was huge. So I think it'll be a bit of a confidence booster. I think it'll generally be positive. So I could go on.
Yeah,
but I won't.
We only have the room for another 15 minutes or so. Dan, same question for you. And from a provincial election perspective, how do you, having been a resident of Calgary for several years now, how do you see how that provincial election might change things if it goes the Conservative side, as a lot of people are, or the Jason Kenney's way, if as a lot of people are suggesting it will?
Let's assume Eric's right and the NDP gets pummeled. There'll be renewed optimism. We might even see a little spike in sales like we did in 2017 in the first quarter, where oil went over $50 a barrel and sales went up about 25% in Edmonton and Calgary. But long term, we're still lacking pipelines. And whether we like it or not, our economy is not diversified to the point where we aren't dependent upon the energy sector. So we still need that to happen. For the energy sector to build pipelines, they still have to attract capital. That capital is fluid around the world. There has to be renewed confidence. There has to be a political plan that makes them comfortable before they'll bring money back to Alberta. If we look at it in terms of when, well, that takes time. And if we look at early indicators, wells drilled is an early indicator of what's happening in the real estate markets and the economies in Alberta, and it's depressed right now. For energy companies to hire people to go out and drill wells, they have to have confidence, they have to be able to attract the capital, they have to have confidence that there's not going to be political interference that there has been over the last number of years. So it's still going to take a while. It's going to take time to recover from what we've gone through.
Kim, lots of, going off of the end of Dan's comment, lots of talk of doom and gloom in the Alberta market, whether it's the office market, the jobs market, lots of layoffs over the last few years. The economy obviously isn't what it used to be, but I think everybody agrees that, and it's why I love coming here, is just you do have a very positive can-do attitude that you can feel even when things aren't feeling great here. You just put out the fourth quarter UA take, which kind of summarizes everything that's happened in the market over the past year. How would you compare sort of how the market felt in 2018 relative to the previous 2 years that you were tracking it?
Yeah, thank you, Mike. And just for everyone in the room, if you haven't had a chance to read our fourth quarter report, we do have it on USBs out at the front, so feel free to grab one of those on your way out. But building on Dan and Eric's comments, I do think leading into 2019, looking at the year up ahead, we're hoping to see some change in the economy. We're optimistic with some of the elections up and coming that they would spur some of that change that we are looking for. But comparing 2018 to the previous years, 2018, we kind of saw moderate sales. They just chugged along. In 2017, with the anticipation of the stress test and rising interest rates, we did see a significant spike in sales in the fourth quarter of the year as buyers scrambled to get pre-approval prior to the changes being introduced. Now, 2016 was definitely the lowest sales numbers that we have seen at UA. 2016 was at a time where everyone was in fear of being laid off from work. We were seeing mass layoffs. They were kind of headlines of the news at that time. So we did see the lowest sales volumes in 2016. So you know what? 2018 compared to 2016, it's a lot better, which is great to see. And hopefully 2019 will just start to bring back some of that optimism if we can get a few changes in our economic climate right now. And one of these days, maybe have a pipeline. Who knows?
We would love to be able to help you on that front. Bob, just one last question each before we go, and I'm just pulling this one out and making you think on your toes a little bit. But if you had the ability, what would you like to see happen in 2018 as far as the housing market goes here, the economy, whatever? It's kind of an open question for you. So.
Well, I think the confidence piece is the biggest one. I think nothing's going to change unless we see the confidence in, people's, economic outlook change. And I think that's a big one. So I think the spring market for us, for Calgary, will be a deciding factor, I think, in how the rest of the year is going to go and where that optimism lands. And I think you were a ways away from any stress test changes, I think, coming in and taking place right now. So I think we just have to sort of continue to educate buyers and find ways to perhaps change their outlook on what they're looking for. So I know my own team needs that same level of confidence and sentiment because I think the realtors, the builders that we're dealing with also have that same level of skepticism, but I also say they have the same level of hope and optimism. So get us out of this cold snap, let the March, normal spring market when we see pickup of activity take a big impact. I think that's going to be a big telling sign of what the rest of 2019 is going to bring.
Thank you. Eric, you mentioned earlier how how you feel about Calgary and what kind of draws you to the city and the market here. Having the perspective of developing in different markets yourself, what do you see in Calgary that whether it's on a cultural level, municipal level, economic level, what do you think other markets can learn from how Calgary operates and does things?
Well, I don't know that Calgary's leading edge in terms of urbanism and progression of all the urban development concepts. So to sort of say they've really got it figured out in Calgary, let's take that to Toronto, I don't see a lot. I get back more to the macro picture. And even though we got bogged down in this city, I'll say in 2014, 2015 on approvals and, a vision, a cohesive vision of what the city is. Historically, development in Calgary has been assisted by the city. It was a partnership between the city, the development community, and the people wanting to grow their city. And there was a high degree of interdependence and mutual respect. And that went away for a while because there was a new sheriff in town that was going to show you how to build a city. And I think that the sheriff got a little humbled, and I think things got a little bit better. And so I'd say that the cohesion I see in Calgary re-emerging with the rebalancing of council and all that unity and that positive Alberta attitude of get stuff done works well. And it doesn't exist in Toronto as much, and it certainly doesn't exist in Vancouver, where last November, basically all the councils changed to the point, towards the philosophy is let's not get anything done, because if we get something done, we might make a mistake and hurt somebody and piss somebody off. So let's just do nothing at a time when you really need to do a lot. So I think it's really just the attitude of get stuff done. Thank you.
And you're still feeling positive generally about the market here?
No. When I say positive, it's our world. We got to make it work, right? So, you know, you talk about the rental projects that used to be condo projects. That's a pivot. That's somebody saying we got to make it work. You know, we've got something to work with here. There is positive population growth in Alberta. International immigration to Alberta last year was 40,000 people. That's a big number. It was only 30-odd thousand in BC. So somebody in the world is seeing the things that I'm seeing here. And it's just a matter of coming here. Like, why wouldn't you come here? I mean, you can buy a house for $400,000. You can't do that in any part of Western civilization except Oklahoma. And frankly, this is way better than there. Right? So I'm positive from that point of view. But to see big numbers, we're not going to see big numbers. We're going to be gutting it out here for years, singles and doubles. You know what? That's fine. We can make a living. We can grow. We can prosper. Yeah. We just can't come show up and get rich in 2 years and go back home wherever we came from because we hit it big on the frontier. Because it isn't. This is just a real place where you got to gut it out.
So you just got to do your homework and work hard, keep your work boots on.
Yeah, sure.
Michael, in regards to the homework side of things, for all the CFOs and the credit officers and the development managers in the room, that homework involves intel. And if you're not subscribing to NHS Live, you don't have the best intel. You need it.
We have a nice bottle of wine behind Kim's chair for that for you, Dan. I appreciate that. And we didn't pay him to say that, by the way. Last question for you, Dan. Just you're looking at both market condo. You mentioned the rental market. Obviously, we've seen a lot of projects that had been intended to be condos starting to get converted to rental. How are you viewing that sector of the market, and any concerns at all in terms of a potential oversupply on that front, having a bit of downward pressure on rents moving forward?
Yes, you have to look at the condo inventory in a submarket where you're looking at rental product, because there are developers that aren't selling. There are developers that are nearing completion of construction that might have to make that choice of, do we continue down the path of selling individual condo units, or do we a bulk sale of our project? And we're talking to some of the players who are active in the market, and including some of the REITs who would be interested in a bulk sale. But of course, it's got to make sense at a rental price. So when we look at the rental opportunities for doing construction financing, we're also looking at the condo sector very closely, because it's not hard for somebody to take remaining inventory of unsold units and make that decision to rent them out. They're coming to us for inventory loans at that point in time. So we're looking at it and saying, does it make sense? Is this going to compete with the purpose-built product? Sometimes it does, sometimes it doesn't. It really depends upon whether somebody's done a real good design of a product, whether they're efficient, well laid out floor plans. And if they are, they usually are sellable product in the condo market. If they aren't, if they're too large and the absolute prices don't work, well, guess what? You're going to have the same struggle in the rental market. You're not going to achieve the higher price on a per square foot basis. So it's all tied together in terms of both the rental and the condo inventory.
Good. Well, thank you very much to each of you. Really insightful conversation. And I know, speaking on behalf of UA, we're more excited at the start of 2019 than we have been at the start of the last few years. I think we see some things happening in the market that, as Eric said, you're not going to be hitting any home runs, but I think we are going to have the opportunity to hit some of those singles and doubles, and we look forward to the year ahead. I hope everybody found the conversation and the presentations this morning informative and insightful. Thank you very much for getting up early and coming out this morning, and we'll hopefully see you back here next year. Thank you.